look, share buybacks, dividends, really quite well. Does it mean you're happy with the results?
No, I'm very happy. 2024 was a successful year for us, and we delivered on all our key priorities, not only in terms of the integration, where we saw major mergers of operating legal entities being successfully executed. We started migrating de facto 90% of the clients booked outside Switzerland and successfully. And we also de-risked our balance sheet, and now we are also making very good progress in our asset gathering businesses in wealth management and asset management. We are gaining market shares in the investment bank in all areas where we want to compete. And we continue to be a reliable partner for the Swiss economies, for the Swiss economy to households and businesses by granting 70 billion of new loans, which makes our outstanding balances at 350 billion. And we are investing for the future. So it's very important for us to think about next. And so we are investing in AI, in new capabilities, new products to stay competitive.
Sergio, when you look at the integration, I mean, it's full speed ahead. You're about 6 months ahead. Is there one month that seems more critical than the others?
No, look, the most critical part of the integration has been always going to be the migration, the data migration. We are migrating in total 110 petabytes of data. 15 have been migrated outside Switzerland. The big chunk of migration is going to start in a few months in Switzerland, where we migrate the balance, around 95 petabytes in 3 tranches, basically in the spring, late year, and the beginning of 2026. And this is definitely a journey that requires a lot of planning and a lot of good work, and the team is on top of it. But we cannot be complacent. So it's a very big task.
If you look at the regions, how are you satisfied with the progress in Asia?
Very good. I mean, in Asia, if you think about the fact that we have been growing very fast, but most importantly, we have been doing that while going through the migration. And so all our colleagues, front to back, have been somehow distracted by that. But at the same time, they were able to stay close to clients, grow assets, grow our business, and be a reliable partner. So in that sense, I'm also pleased to the progress we make in the US, both in the investment bank and also in wealth management, where we are now executing on our plans to restore a good level of profitability. And in the investment bank, we are gaining market share.
There's a lot of optimism of banking in the US. How will you take advantage of that?
Look, I think that we are in the U.S. is a very important market across the board for us. Is the largest wealth management market in the world. We are an important player there. We want to enhance our capabilities. We want to enhance our profitability. And in terms of the investment bank, we see a good momentum in the pipeline building up. Having said that, if you look at year-to-date volumes and activities in capital markets is down 26% year on year. So while it's a very promising pipeline, the truth of the matter is that the year has started in a rather slow way compared to last year.
But when you talk about enhancing capabilities, would that also be through acquisitions in the US?
I think it's at this stage it's totally premature for us to talk about acquisitions. We have enough to do in order to improve our profitability with the current setup, and so we need to digest what we have on the table right now, and then we'll think about the future.
Sergio, I know it's been a couple of quarters where there's this overhang of capital requirements from the Swiss authorities. Any more information on what they plan to do?
No, look, I know as much as you do in terms of exactly what they want to do. We're going to know much more in May, according to the State Secretariat for International Financial Matters. The public consultations of the government proposals are going to be released in May. So hopefully the proposal will be aligned with the desire of the Swiss Federal Council to maintain a competitive financial centers and allowing UBS to be competitive in the marketplace, and for us also to be able to be a reliable partner to the Swiss economy.
But do you think they'll soften their stance from their initial proposal or press speculation because of what's happening in the US?
I have no indication of, it's very premature to speculate what's going to happen.
Talking about the US, what do you expect for markets going forward? We've seen quite a lot of volatility. There's talk about these tariffs. Unclear whether this is a president that wants deals or would rather put tariffs and then think afterwards.
The market has started with some good momentum. You now see a little bit of volatility and dislocations. It's fair to say that the tariff topic has been somehow already priced in the market, and you can see it in the last few days, despite the fact that we are moving to the next level with the implementation of tariffs or the threat of implementation. You can also see the willingness of both parties to engage and negotiate, which I would say for the time being is okay. But any major positive or negative developments on that front will create spikes in volatility. For sure, negative outcomes are not priced in the market. The consequences for the economies, the affected economies, could be significant to inflation. I can see inflationary pressure coming out of tariff war, and that in turn would mean that central banks would need to stop their easing path, potentially even reverse, something that is not priced in the market.
But Sergio, how would you describe the markets? They also had a cold shower because of DeepSeek and everything that's happened in AI over the last couple of weeks. Are they particularly sensitive? Are they priced to perfection?
No. Well, there is an element of, in certain asset classes, in certain segments. I mean, if what you mentioned with DeepSeek seems to indicate a lot of fragility in that sense, in the underlying assumptions and valuations. So I would say that there is a big element of pricing for perfection and potentially underestimating the power of innovation on how can even affect the one who are driving innovation.
But again, all of these geopolitical tensions, what do they mean for a bank like UBS?
Well, look, for us, I think that we are well prepared in terms of what it means for us in terms of risk management or capital management. That's the reason why we run a balance sheet for all seasons. But eventually, a bank is potentially going to be affected by second-order effects. What does it mean to the economy, and in turn, what it means to our clients? And therefore, no matter if they are wealth management clients or they are corporate clients, there is a second-order effect on us. And what we need to do is to stay close to clients and help them to navigate this challenging environment.
Do banking policies in the US also impact European banks? Again, there are question marks about DEI initiatives because of the Trump administration.
I think it's, as much as we are concerned, we are not really overly focused on changes. We want to continue to pursue a policy that is aligned to our culture. We are a very diverse and inclusive organization. If you think about from the board of directors down to the management board and our global presence, we have a huge amount of diversity, gender diversity, ethnic diversity, generational diversity, and this is very much reflected with our client base, and is one way for us to be seen as a important global player coming from a small country that has diversity at the center of our culture.
Sergio, what can you tell us about some of the litigation that we could see? For example, I know there's the case with the U.S. tax, Credit Suisse, that's ongoing. Are you expect to settle?
Look, there are, as you know, there is a big long list of unresolved matters that we inherited from Credit Suisse. We are working diligently through that with also the authorities to find solutions, but it's premature to speculate on timing and outcomes.
February bonus season, how are you expecting that to look?
Well, I think that our policy is to pay for performance and stay competitive. I would say that our compensation will reflect the competitive marketplace, but also a good balance between rewarding shareholders and rewarding our colleagues and employees.